Hey everybody, Abdullah Shamari here. Today we're going to continue our How to Read Financial Statements series and we're going to be discussing the cash flow. Let's do it. Make sure to subscribe to my page, crush the like button for the YouTube algorithm, and check out my Patreon link below. You'll get insights into my watch list, my portfolio, my daily readings, as well as instant posts on my buys and sells as they're happening each and every day. Today, we're going to be discussing the cash flow. I think it's one of the most important statements that each public company gives out to investors and the public at large. It tells us the story of what happens with all the cash that the company is using, whether it's in operations, investing, and as well as financing. So we're going to dive deep into the cash flow and see what it's telling us and what information we can take out of the cash flow to know if a company is doing well or if it's on the path to demise. Let's do it. We're back here on the SEC page with the Illumina financial statement filings for the year ended 12/31/2020. We want to discuss and use Illumina as an example of how to go over a statement of cash flows. If you haven't checked out my previous videos, you should check it out on the balance sheet. It'll help you to understand how to navigate to this website and how to look at the balance sheet prior to looking at the cash flow. Now we're going to be navigating to the statement of cash flows. So again, here we have the index and we're going to just be going to click on consolidated statement of cash flows, and that's what we have here. The first thing disclosed in the statement of cash flow is cash flow from operating activities. So this is basically all things part of the business, part of the daily operations, part of their sales cycle, part of the cost of their sales, etc., and how they run their business. And then the other two sections in the statement of cash flow are investing, where they're purchasing fixed assets or they're making various securities investments or security sales. And the final one is financing, where they're potentially using debt in order to finance the company. They might issue out shares so that they can get money from shareholders or other interested investors. So first and foremost on the cash flow, the first line item, the net income that is stated on the statement of income or the profit and loss, as many people describe it as. This net income number has a lot of things in it that are non-cash based, and we want to be able to take this number down to pure cash. How much cash did the company generate from operations, or how much cash did operations use up? So it's either going to be a positive number where they've generated cash from operations, or it's going to be a negative number where they actually used up cash in order to maintain their operations. So you can see here there's various positives and negatives to this number. A positive being that an add back where, for example, depreciation, the company didn't use cash for depreciation. Depreciation is a non-cash accounting convention. In order to be able to use up an asset over a lifetime, you basically take an equal amount of the asset's cost into your profit and loss each and every period. So depreciation has no cash impact outside of the initial purchase of the equipment that was made at the initial outset of bringing the equipment in. Other than that, there's no cash impact. As a result, the company adds back 156 million worth of depreciation because there was no cash outflow for that. So that didn't take away cash from the company. So they need to add it back to net income because as part of the profit and loss, it's subtracted out of net income. And another example, we have unrealized gains on marketable securities. These unrealized gains are basically gains that the company has on its securities that it's invested in, but they haven't realized those profits on those securities. So even though it's included on the profit and loss due to various accounting conventions, it has no cash impact. As a result, we have to subtract that gain from the net income because it has no cash value. There's various other add backs and subtractions depending on how much prepaids is increased or decreased over the year, or inventory has increased or decreased. That helps you to get down to the actual cash value that was used in buying inventory, or maybe an add back because you didn't buy any additional inventory, you actually just used up inventory for the period. So as a result, when you get down to it, we started at 656 million net income, but we actually are at over $1 billion that Illumina has generated from operations. We always want to see a company have positive cash from operations, and in this case, Illumina is doing really well. They have $1 billion generated from operations, and we can see, looking back to the prior years, that means they have a profitable business. And also from a cash perspective, they have a business that's helped company generate cash year over year, and it's consistently generating the same amount of cash. And that's one of the reasons why Illumina stock has continued to rise, because it's a profitable business and it continues to do well. Next, we're going to be going through cash flow from investing activities. Again, here we can see it's related to various securities that the company is buying or selling. We see maturities of securities, which means these are securities that the company purchased potentially 1 year, 2 year, or 3 years ago, and it has reached the maturity date or the end of the securities period of investment. And as a result, the company sells those securities at the maturity date. And so they're generating cash from that investing activity. And then the next line item is purchases of available securities. And so now they're using those monies from the maturities to purchase additional securities. And we can see here they've purchased more than has matured over the period. Next line item is purchases of property and equipment. So they're buying equipment or various things that they need for their business or their factories or their labs, etc. They might also have various strategic investments. They might invest in certain companies, they might invest in certain products, or they might invest in certain licenses that they need for their operations. And then finally, companies might have derivatives in order to hedge their risk on various international contracts. So you could have derivatives for currencies to be able to hedge risk on currency increases and decreases. So we see that they have various derivative assets as well. Lastly, we're going to go over cash flows from financing activities. So usually these are either the company's buying their own stock, the company's giving out some of their stock through an offering because they want to generate additional cash for various strategic initiatives. Additionally, it includes taxes paid for various settlements of equity awards and various other activities relating to the stocks. Lastly, we'll go over the cash flows from financing activities. You'll see here it'll have the company's repurchases of its own shares. So many times companies, if they have extra cash, they will purchase their own shares because they feel like shares are priced lower than it should be. And we can see many companies doing this, such as Berkshire Hathaway, Apple in the past, etc. Other things that might show up in the financing activities are offerings that the company is doing. So a lot of times if you want to know if a company's done an offering recently, you can go to the statement of cash flow, see if they have huge amounts of cash coming from various offerings that they have. In addition, financing activities could be various stock settlements or stocks issued to individuals within the company and cash that might be generated from those activities. At the end of the statement of cash flows, we can see it does a reconciliation of the cash and cash equivalents at the beginning of the year, cash and cash equivalents at the end of the year, which then helps us to understand if the company's cash is increasing or decreasing. And if it is decreasing, what are they using it from? Is it that they have to use it for operations? Did they invest in something strategic? Did they go and buy back their shares? So all of these things are important so that we know the allocation of the company's assets and cash, so that we know the allocation of the company's assets and so that we know the allocation of the company's capital at all times. That was a quick overview of the statement of cash flows, what to look for, what's important, describing the different line items, what's happening in the statement of cash flows for us to be knowledgeable in the company's operations, investing, as well as financing activities. It's important to understand what the company is always doing with its capital, how it's allocating its capital, how is it moving ahead of the curve of its competitors with the capital that it's been generating, or maybe that it's on a downswing and the company is not doing well anymore. And the cash flow is able to help us see quicker if the company is not doing well, then the statement of income or the P&L can tell us at times. This was a key fact in one of the traditional companies, Sears Corporation. The company was on the downtrend, and you could see it on its statement of cash flows year over year over year over year, even though the profit and loss wasn't saying that it was doing bad because of one-time gains that they got or various one-time transactions or selling a portion of the business. However, when you looked at the cash flow, you saw that they were not making money from their operations, and they kept using up cash from operations. And the only way you could have seen that is on the statement of cash flows. So it's very important to always look at the statement of cash flows when you're investing in a company to understand what's happening, what's going on, and to be able to make a knowledgeable decision on whether to invest or not invest in the company. As always, these are some tools for you to be able to use in your due diligence for various investments. Definitely let me know if you have any questions. Make sure to comment, as there's a lot of information to take in and there's much more information to divvy out. However, I want to make it simple and to be able to just do a brief overview of the cash flow. As always, make money, enjoy life. Peace.